What's happening? What is happening, everyone? So, this morning we're going to go through support and resistance and also the importance of time frames and micro movements within those time frames. What we have on this chart is GBPUSD, so the British pound against the US dollar, and this is what we're looking at today. So this is on the 4-hour time frame. You know, we might even take it right back out. I'm just going to run you through basically how I will analyze a coin, starting from the larger time frames and scaling in. Some people, they choose one specific time frame to look at and they will trade entirely off that time frame. Usually, so say someone is trading the 15-minute chart or 5-minute chart, they'll probably analyze the 4-hour, go in to the 1 and then go into the 15 and place their entry on the 15. But I find the further the analysis you go, the more confluences you have. So a confluence is just like a confluence is another form of confirmation. So everyone has their confluences. So me, I use the RSI, the MACD, so the relative strength index, the moving average convergence divergence, as well as the time frames, trend lines, support, resistance, basic structure, overall distance of travel, and liquidity zones where I believe there's high liquidity, because I tend to use a lot more of the ICT concept, the ICT trading concepts, which focuses a lot more on sweeping liquidity and traveling in the direction of the institutions and the banks. And what they look to do is take out the smaller guys and use that liquidity for movements in the direction where they would like to go. So this is the 1 week time frame on the GBP USD. So this is basically just going to be a video of how I would analyze this chart, and we'll put a trade on. We'll set an entry for a trade and then we can revisit it later and see how it played out. So just marking it up. Overall on the weekly we have weekly time frame. Yeah, we're traveling down overall on the weekly if we zoom out, but at the moment we're in an uptrend because we're in somewhat of a pullback, like a retracement. So with every trend we have big pushes down and then retracements up. The retracements up are to fill the imbalances in the orders on the charts. So anytime there's a whole bunch of sells, so see like this for instance, so a whole bunch of sells here, all these orders, for every buy, for every sell there needs to be a buyer. So if someone's selling, then someone needs to be buying to have that order filled. And what we have here is a major imbalance of sellers against buyers. So a lot of sellers and not too many buyers. So the sellers are heavily outweighing the buyers, causing these big dip in the chart. Now, this imbalance, all the imbalances sooner or later will have to be filled. So see, we have an imbalance here, and then we're traveling down, and then this has come right up and filled this imbalance. So at some stage, price is going to want to revisit these levels. This level, it's going to want to balance, correct the chart, come back in here. So anyway, what we're looking at for now is we're looking at this resistance zone right here. So this resistance zone right here is proven to be strong. So the break of this support zone was quite strong, had a lot of momentum. I'm going to say this bounce would have been from that support. It's bounced up and cracked straight through. So because of the strength that this price broke through this support zone with, it's now flipped this into a resistance zone. So when we break through a support, it changes to a resistance zone. So all those buyers that were upholding those levels have now turned into sellers. Not those actual people, but you know what I mean. So now we have a resistance zone, and if you look, when prices come back to retest how strong this zone is, rejected, rejected, We'll go across. Another 2 rejections. Tested it again. Reject, reject, and it's continued down. So here it's tested it, and it's not too much of a bounce, but then it's tested a second time and it's pumped down. And we have the same thing here. 2 tests. So let's remove. This is just on the week. This is a weekly chart we're analyzing. Still yet to go in. So now it's coming back. So that's what? That's 4 tests. Now it's coming back for its 5th retest. So what this is telling me is price is now a price on the weekly is in a short-term uptrend. Overall down, short-term up. So we will be trading an uptrend because each one of these candles is one single week. Is 1 week. So each one of these candles is playing out over a whole week. So this has told me, what this chart is telling me is we're about to make another push to the upside. So we have higher low, higher low, higher low, higher high, higher high. Is that higher? Higher high. We'll be going to make a new higher high. So that is what I would like to trade when we are scaling in. So, alright, you get it. So I've just marked out these lines just to help me identify the trend as we go closer. So let's get in now to the daily chart. This is the daily chart. Oh, damn it, I dropped my mouse. I think we're right. We're good. We're good. Alright, so now we're on the daily. So before we're looking at the weekly, and what did we come up with? We're in a weekly overall downtrend, probably a monthly downtrend. But the weekly chart is trending upwards towards this resistance zone. It wants to retest this again. This will be the 5th retest for price on this zone. So we don't know if it's going to go through or if it's going to reject again. Historically speaking, most people that trade will tell you price is going to hit it and come back down because it's 4 times it's retested this zone and it's been rejected every time. But I do have a biased opinion when it comes to things like this. So, in my opinion, logically thinking, if the more a zone is retested, the weaker it's going to become. Whereas other people would tell you the flip side. They would tell you the more it's tested, so let's go back to the weekly to explain this point. Now, here we go. Damn it, did not mean to do that. Okay, so now we're talking about this resistance zone here. This overall zone here, been retested 4 times, so it broke through here. Not a break of structure, because I guess if we zoom in, this is why we're going into the time frames. If we zoom in, had a break structure, broke through this support zone, come back, retested it, rejected once. Circle it. Rejected once, tested it again, rejected twice. Heavy push. Then over time it's come back and revisited. So this is over. That was Monday, April 2018. It's come back in 2021. Rejected again, rejected again. That's 4 rejections. So a lot of people will tell you the more times it's rejected, the more confirmations that is that zone is a strong resistance zone. So because we've had it tested 4 times, technically you would use that as a confirmation that the 5th time will bounce off again because it has proven to do so historically speaking. But the way I look at it is this resistance zone is all sellers, right? So here we have sellers pushing price down. We have buyers pushing price into the zone, sellers pushing price down. Again, we have buyers pushing price into the zone, sellers pushing price down. Buyers pushing price into the zone, sellers push it down, and again, sellers push it down. Buyers pushing price into the zone. The way I look at this is the more times price hits a zone, the weaker it becomes. More of these buyers are getting more of these sellers out of the way. So the sellers get exhausted and the buyers come through. So we might have something that looks like this. So coming up, and we'll have a rejection. We'll definitely have a rejection because the support is, the resistance is there. But then we may have a bit of a stuff around, maybe a little fake out, and then I'm expecting a break. So this battle here, in my mind, I'm like, because I see into the future with these things, you know what I mean? But no, logically speaking, the way I look at it is the more times a zone is approached and tested, the weaker it becomes. Because the lesser of the opposing side there will be. So the buyers are constantly testing these sellers. Eventually, all those sellers are going to get exhausted and the buyers are going to triumph. Then the zone flips again to a support. We'll retest and we're off. So let's get rid of this. Now, back down to the daily. Okay. Now, this is a daily chart. So, we have an interesting... Well, now that we're on the daily, what are we doing? What's the daily chart doing? So we know the weekly is in an uptrend. The daily is actually in a downtrend. Depends how far out you look. So when you say the daily chart, because we'll be trading inside this zone again because we're scaling in. But if we look at the overall daily chart, we've had an uptrend here, downtrend here, uptrend here, downtrend here, downtrend, up, down. So we're getting these pushes and these retracements. So we're getting higher highs, higher lows, lower lows constantly. But right as of now, we know price wants to reach this zone. We don't know when it's going to make that push for that zone, but we know price wants to reach there. So what I would do is mark out. So this is the new higher high. You know what? I'm going to use a line, not a ray. This is the new higher high. And this is the last lower low. Higher low. Last higher high, last lower higher low. So we think price is going to trade within this zone. We haven't gone over the Fibonacci yet, but we will. So we're not going to use that in this analysis. But now that we know price is trending down, so price is coming down through this pullback. So this fair value gap here, oh, you know what? I can just mention everything and then we can reference the other points. So this is fair value gap has been invalidated, causing it to be an inverse fair value gap. So I think we're getting another push of price off of this zone too. And because I can reference whatever, this is a fib. I love my Fibonacci's, brother. So here we have over a 50% retracement on the Fibonacci already, approaching that 0.786 level, but haven't reached it yet. So what we want to look for here is most likely another downward push. So now we're going to go into the 4-hour chart. We know on the daily we're trending down. Let's see what we have on the 4-hour. Love juice, mate. Struggling to get service out here. Anyway, we'll go. Well, now we're on the 4-hour. All right, we're back. 4-hour chart. So on the 4-hour, so the daily we know we're trending down. Weekly trend overall is up, but we're going to scale right down to the 1-minute chart. So we're just going to keep analyzing right down. 4-hour chart. What are we doing? What's this? Lower high, lower low. Lower high, lower low. Lower high, lower low, lower high, lower low. So what are we doing? We're marking out the lower highs and we're marking out the lower lows. Lower high, lower low. So for this trend to continue down, we need to break this lower low. So that is a point of interest for us. This currently is now the new lower high. We do need a confirmation through this strong bullish move though. So we have now marked out lower high and lower low of the 4-hour. Let's have a look at the 1-hour. what are we seeing? So we're going to see a bit of a battle here. So on the 1 hour, we were trending up, small uptrend, broke of structure, because remember the overall downtrend is the overall trend is down on both the daily and the 4 hour. So a confluence I like to use is that the trend is following the structure of the charts in the higher time frames. So if we're trending up on the 1 hour but we're trending down on the 4 and the daily, we don't want to be taking that trade. We want to be trading with the trend. The trend is your friend. Everyone will always say that. Trend is your friend. Trade with the trend. You get a lot bigger trades and you'll have a lot more confluences. So this, we're looking for this to be the new lower high, which it seems to be. So we have a change of structure here. We have a break of structure, and we are anticipating price to come down to this previous lower low down here. So our trade on a 1 minute time frame, if we were going to trade the 1 minute time frame, which we will, we'll put an entry on, we'll put a trade on. In this case, we'll be looking for a confirmation of this fair value gap. So this is a bearish fair value gap, so let's mark that out. Oh, I can add text. Can I? Yeah, I can. I'm going to add text to the top. So we have a bearish fair value gap here. So we want confirmation of this fair value gap. We want price to come into this zone and come down. That's a confirmation. And we want structure to hold true on the lower time frames for a downtrend. So we want this to generate a new lower high. We want a new lower high and a new lower low, maybe even another lower high. I want a couple confirmations before we jump into this trade. That price is beginning to trend down on the 1 hour. 15 minute, we may start seeing some of these confirmations. So it's in a bit of a price push at the moment. Price will need to retrace to take the liquidity stored in this zone here. So all these unfilled orders here, because price has pushed through, there's an imbalance in the market. So I've talked about this before. The imbalance in the market always needs to be filled. Price is always going to want to fill that imbalance. So it will come up, sweep the liquidity, and continue the push down. Because the more liquidity the movement has, the stronger the movement is. So if it's struggling to get past this, we have a bullish fair value gap here, which we want to see this inverse. But see, this is where price is getting supported because it's hit this support zone. So it's stuck in here. So there's a good chance we'll need the liquidity from this bearish fair value gap to push through this bullish one. So we want this to be inverted. So we want an inverse fair value gap. That's what we want. We want to see this. I'll put a question mark because it hasn't happened yet. We want confirmation of that. And then we can start looking for our trade to the downside. So 15 minute. There's not... when we get a couple confirmations here in the 15 minute chart, then we can start doing some analysis on the 5 and 1 to look for our entries. So we'll revisit the chart then. Okay, back to the charts. GBPUSD. So I don't know how long it's been. Maybe an hour? Maybe an hour. So about an hour's passed. And what we were talking about before. So currently this fair value gap down here, the bullish fair value gap that we have marked out, is holding true. So price has bounced off that back into the bearish fair value gap that we formed on the way down. Here on the 15 minute, it's not too clear. Go to the 5. If we want to load. Yeah, so on the 5 minute, so fair value gap is left when there's an imbalance in price. So what we're looking for is 3 candles with the wicks out, without the wicks overlapping. So we have 1 candle here, one candle here, one candle here, and see how this gap between the top of the wick of the bottom candle and the bottom of the wick of the top candle, there's a big imbalance in the middle here, which just means price went straight through. So the sellers overwhelmed the buyers by a lot. So that is the fair value. So that is the gap. So we can remove this block. So this is the gap that we're looking at. Price did come back, tap into it, and continue down to on the bigger time frame, the fair value gap, the bullish one. This is why we wait. This is why patience in trading is important, because we need to wait for our entries. So an hour went past, and now we're approaching this. So what we want to see here, now that we're back, so this, because this zone is being crossed through freely, this is now the newer swing low. So it's made a lower low, and now we're looking for a lower high. And then we'll have confirmation that we will be trending downwards on the 15 minute. So this is the 5 minute chart now. So what we're looking for now is price to sweep the liquidity from this zone. So we want price, I'm going to leave this drawing on here so we can reference back to it later, but we want price to sweep through here, and it'll probably bounce something like this, but it'll go through. So we want price to come up, come down, and we'll probably be looking for our entry somewhere in this range. So this would act as the new lower high, and then we'll be looking for our entry somewhere in, I'm going to mark it out with another rectangle, but different color, go green. I don't know, somewhere in this zone. Hold on, let me make the colors, let me make it more transparent. That's better. Alright, now we're going to look for an entry somewhere in this zone here. After we see prices respected this fair value gap or swept out liquidity, and we come into this zone here, we know price is going to be looking to push past this swing low and inverse this fair value gap. And our target is, if we go out to the 1 minute time frame, let me have a quick look. If we're going to load, we've got a bit of lagginess here. I don't know why. Here we go, got the 1 hour. So this is the previous lower low overall, and then we have a higher low, higher high, obviously because we're trending up on the 1 hour, but we know the overall trend is down, so we're waiting for that shift to happen back down. And what we'll be targeting is this area. So we're targeting this movement from here to here, but because we're trading on a small time frame, I want to target this zone right here. That's just a 50% retracement. That's a pretty safe area. The reason I trade this is price switches all the time. Price gets choppy. No one knows exactly where the market's going to go. So instead of chasing this whole movement, because we know price wants to take out the new lows, that's what the trend's saying. But price always evaluates about 50% in the range. Around when it hits the 50% mark, price starts to consolidate and it can choose a new direction. The sellers can get overwhelmed by the buyers and the price can change direction again. So if we just get in and get out and take our profit before we hit that 50% zone, we have the biggest chance of success. Like, a lot of people will trail their stop, which means instead of having a stop loss, they have it follow the price action, and then that way they can follow the price all the way down and get bigger trades. But I stick strictly with 3 to 1s, just in and out. So okay, we'll leave that there just for reference. This is a 5 minute chart. So we'll be looking for a 3 to 1, and we'll be looking to close it before this green little zone here. So now we're going to get to the 1 minute chart. So what we want to see now is a shift in structure after we have tested this fair value gap zone. Once we have a shift in structure there, we make our new lower high. We will use that lower high as our stop loss, and we'll find our entry. Aiming for a 3-to-1 trade, always. We're always aiming for a 3-to-1 trade. Okay, so for now, we let that play out, and we will come back to it when we see a confirmation or an invalidation of that fair value gap. Bingo, bongo, bango. Don't know what that means, but here we are. So we've come into this fair value gap. Price has been rejected from it so far so good. We're going to let this play out a bit longer. I just wanted to come on here and show you guys. Price has bounced around where this high was. So we'll either start forming structure to the downside here, or we'll come up a bit more and come down. When we get back to this fair value gap down here, this bullish fair value gap on the higher time frame, we will have another bounce as well, and that's probably where we'll find our entry. So we'll start forming structure down. We'll probably bounce on this support zone here too, because as I explained before, tested, broke through, flipped it over, support. So tested the resistance, flipped it, became support. We come back down here, it will bounce again and most likely break through, just due to the overall momentum of the higher time frames. So that's what we'll be looking for. And yeah, so we're going to let this play out for a little bit longer. We just want to see some ranging happening in this zone. If we break straight through this, then we're on. So if we break straight through this fair value gap, then we'll be looking at taking more of this downside position and playing it out to the bottom. But like I said, we want to see a bit of a range here, ranging but trending down, and I'll look to make an entry and take profit here. If it pumps straight through this fair value gap, we'll most likely take an entry to ride the trail all the way down here. But we'll see how that plays out. For now, we're just watching. Alrighty, so I'm quite confident now in the way price has responded off this fair value gap. What's happened here? So we've had it tested once. So this is the resistance zone from, if we look to the left, from this area, right in the middle of the fair value gap. Tested once, tested twice, didn't even reach the retest. Change of structure. We had higher low, higher low, higher low, lower low, lower low, lower low. Now price is going to look to make another lower high. So lower high, lower high, lower high. Now we're going to make another lower high. So now we're on the 1 minute chart. We're looking to make our entry. Price is going to come back up to this zone. And here we want a level to bounce off though. So structure is pretty choppy. Let's just say, let's just go off the 50% retracement of this zone. So that puts us about here. And we want this to be just above that fair value gap. Case price. And we want to ride this down here. So it's a 5-to-1 trade. Let's look over to the left, see. We could even have, I like a 3-to-1. It just gives us more protection. Just in case we get a sweep and carry on. Because it, yeah, because I am expecting a bit of a sweep. But as the structure stands now, you know what, even we could tighten this up. Structure shifted, and we're going to go for a 3-to-1. Don't even worry about that whole movement. We're a 3-to-1 right there. So that is the move that we're going to go for. 2-1. Alright, so that's our entry and this is our exit. See how this plays out. So we're approaching, we've come down from that fair value gap that I originally pointed out. Price has broken structure, we've made a new lower low here. Now we're coming up to make another lower high. So my entry zone, my stop loss is set above the 2 previous lower highs. That's the entry tapped in right now. So immediately we're up $50. Now we want to chase this move down to this 50% retracement zone of the entire move, which makes that 10% of the 4-hour swing, 4-hour time frame swing, and that is why smaller time frames are important. So it's always important if you're trading the small time frames, start on the weekly and scale in. Some people will tell you different, but my opinion is biased. Doesn't matter what time frame you use, you can scale in from the highest time frames, and I recommend it. So we'll let this trade play out now, and then we'll revisit it to see where we went right or wrong at the end of the trade. And this is where it becomes important for this to wait for these confirmations, because so I'll leave this on the screen. I'm going to stop out of that trade there. Okay, so now what we want to do is wait for extra confirmations. Get right back in, baby. We have done the analysis, we know where price wants to go, but we have overlooked the entire move altogether. So I think we let this play out a bit longer. I need a stronger confirmation, I need a higher time frame confirmation, I think. But this is the pair that we'll be trading, and we'll make it all back. All it takes is one trade to recoup those losses. 1-3-1, so you only need a 30% profitability rate with 3-1 trades, and you come out on top. So let's look at this move from here to here. I see. So if I came in, like I said before, setting the stop loss up here, accounting for that bigger move for a 2.5 to 1, that would have been the smarter decision. So I think I'm going to go for my original strategy now. I wasn't supposed to edit that trade, so let's look. Alright, that's the one where we just stopped out. So now we have this price. We have this manipulation. So that's your sweep. That's your sweep of this liquidity. So there's your liquidity sweep. So when I drew this spike, that is exactly what I was talking about. Came out, swept all these highs, and we'll use this momentum to push lower. So we're going to enter. Yeah, so we're going to go top of the fair value gap. Oh, where's the... Here to... Because we want to push through this fair value gap zone. Yeah. 3-1. That's what we're doing. Same thing, same risk. 250 to 765. It's supposed to be a stop limit order, but we've set that, and now we'll revisit this when we're over. Okay, so I filmed this. I filmed that previous video on March 11th when it was a bit warmer here in Australia. But that's what I love about the Trading View feature. You can replay the charts and the trades. So I'm not sure why I didn't finish that series of videos on that trade, but
it was interesting watching because obviously I got disheartened with that first trade that lost. And then I put on the second one, and I think I went with the set and forget method. And I was like, you know what? Put it on, trust yourself, walk away. And I mustn't have just... The day must have got away from him. Maybe I did something else. Maybe I went out somewhere. I'm not sure. But I just found this in my videos archive and wanted to upload it. So now we can revisit the trade and we can see how it played out. So this is the trade on the screen. And as you can see, if I just hit play, we can see how the trade did end up panning out. So with my safer stop loss there, we didn't get stopped out. Went into drawdown a little bit, and then over time, we ended up hitting our target of 3-1. The trade did take... The trade took us... It took 20 hours to close out. But it just goes to show with these things that you have to trust your gut. And even back then when I filmed this, knowing, like, losing that first trade, like, I was trying to keep it cool on camera, obviously, but losing that first trade and just knowing that you need to analyze where you went wrong and you just adjust and adapt. Like, you're not going to get everything right all the time, but if you journal your trades and you go back through and look at why it lost, then by process of elimination, you can slowly just get better and better and zone in on your skills and make things easier for yourself and make the money easier to make. But I guess that's why it's important keeping a journal and documenting your trades and trading sessions. So I might use my YouTube and do my analysis on here, and then I'll do one video for the analysis and then one for closing the trades. But I think that could be a cool way to do it because I really want to kickstart this YouTube journey and start doing that too. But I thought I'd upload this, just some raw, authentic psychology and thought process behind taking a trade. Well, what goes through my head, at least, for taking a trade. I don't know all the technical terminology that people use and things like that. This is just how I've taught myself, just through watching other trading gurus and things like that. But yeah, there's a good insight what goes through my head when I'm trading and what I look for. So, like, subscribe, stay tuned for the next one.